right after Trump announced the tariffs, most markets fell quite drastically, except today I want to discuss the hot topic of tariffs and what does it mean for our investments, what does it mean for stocks, what does it mean for financial future, and my opinions on these topics. Now, before we get to how this impacts companies, how it impacts our investments, I think it's important that I first discuss with you, what does this really mean for consumer prices? What does this really mean for our day-to-day purchases that we make? So I'm going to give you some examples. The first example on your screen is a smartphone. Now let's assume the smartphone costed $1,000 if we were in the US and we went to the store, or we bought it online for this amount of money. Let's also assume that smartphone was imported from abroad into the US at about $500. On top of that, another $250 would be the cost of logistics, local labor, R&D, and other costs. And then the rest, the other $250, is the profit on the smartphone. Now, let's assume there's a 30% tariff. So that means that $500 a company would pay to import the smartphone into the US would now be $650. Let's also assume in this model that $250 cost of logistics, R&D, overhead, and other costs would be the same, $250. And the profit also stays the same at $250. This means the total price to you and me in the US for that smartphone is $1,150. So with a 30% tariff, the price you and I would pay in the US for a smartphone would have increased by 15%. Now that's a very theoretical example. So let's tweak the example slightly. Now let's assume in the same illustration, we change the cost of labor, logistics, R&D, etc. Now why? Because if there are tariffs, what's going to happen is there's going to be inflation. Employees in the US will demand higher salaries. Let's assume you're a logistics and trucking company. Now, if you're going to import a truck into the US, that's also going to cost more because of tariffs. Maybe some R&D equipment and material may also cost more. So that $250 is going to now become $300. Let's also assume the smartphone manufacturers cares about its investors and wants to keep the same profit margin of 25%. So instead of $250 of profit, that profit becomes $317, which means that smartphone is now $1,267. So an almost 27% higher price. So in both the cases, what you notice is a 30% tariff results in an increase in the price, but it does not translate to a 30% increase in price. Now let's take another example. Now we're all going to the grocery store each week. Let's take something that we may get at a grocery store that's imported from abroad. Let's assume that that particular product is imported into the US at $10. On top of that, there's a $2 cost for local labor, so labor in the US, logistics, and overhead. And let's also assume a $2 profit. That means that particular product that we get in the grocery store comes at $14. Let's again assume a 30% tariff. So now instead of paying $10 for the imported product, the wholesaler or the grocery store pays $13. Now, because this product is more price sensitive, let's assume that they've somehow managed to negotiate with various local vendors, local labor, logistics, instead of a $2 cost, a cost within the US of $1.50. And let's also assume they've trimmed their margin from $2 to $1. This gives you a total price of $15.50. So in this example, with a 30% tariff, the price of that product in the grocery store goes up by almost 11%. And this is after the profit has been reduced by 50%. Now, what do we notice in these examples? What we notice in these examples is even if the revenue of these companies go up, typically the profit margin is going down. It also means that companies may not have the same profitability as they did before. Now, of course, you have a bunch of angry consumers or disappointed consumers, but what does it now mean for our investments? What it means, as I said once again, is that even if revenue goes up or it goes down, profit margins will probably not be the same. That means when you're looking at the price to earnings ratio of different companies, specifically the forward price to earnings ratio, they may not be accurate, as it's very hard to estimate what these tariffs may do when it comes to the impact it has on people's purchasing ability of these products and their willingness, more importantly, to buy these products. Now, one may say, okay, what kind of strategy should we adopt? There's typically two schools of thought that's been going on here and that people have been discussing. The first scenario is people saying, oh, okay, hey, the tariffs that the US government has imposed, this is a very short-term phenomenon. It'll be used as a negotiating or a bargaining chip or a bargaining tactic. And as a result of which the market will do better very soon because prices will come back down, tariffs will go away. I don't agree with that way of thinking, but let's assume that happens. It's a great buying opportunity, which means it could be like 2020 during the pandemic, around February, March 2020, where markets collapsed pretty quickly, but then they went back up very soon after that. My feeling is that we're going to have the second scenario play out, which is this is going to take time to resolve. The US will now have negotiations with various countries, and it may be several weeks, if not months, before all of this gets sorted out. Now, the problem with that is we don't know which companies may get impacted more, which companies may get impacted less. It's very difficult to predict or to judge that. So I was asking myself, what do we do? What should I do? One of the things I've decided to do is to continue investing in an S&P 500 ETF. Because as I said, I don't know which company is going to do well. The S&P 500 ETF is a composition currently of 503 companies. So I'd like to stay invested in that, and I'm going to keep buying as the price goes down further. The second thing I'm going to do is look at other markets. Now, why do I say that? If you look at the graph that I'm showing you now, you'll see that right after Donald Trump announced the tariffs, most markets fell quite drastically, except India and China. China was up after those 2 days. India was down by about 1%. So perhaps I was thinking investing more in emerging markets may be a good strategy. Now, no matter what strategy I adopt, I think the key is to not panic. I think that's the most important thing. And of course, to keep reading, to be informed. And even if one does not understand which company is going to do well, which company is not going to do well, I think it's a question about betting on the whole story, betting on the fact that, or investing based on the fact that one believes that everything is going to get sorted out. And in the medium to long term, all of this presents a great buying opportunity. Those are my views on tariffs. I'd be really keen to know what are your views on tariffs. Please do write about that in the comments below. Please like, subscribe to the channel, and I'm looking forward to talking to you about another topic in my next video. Take care. Bye.